Subprime mortgage crisis. Before the subprime crisis, a qualified home buyer would simply visit his own traditional hometown bank, and that bank would then offer to that qualified home buyer a traditional prime rate mortgage. Investment bankers began to buy prime loans and put them together and make mortgages-backed securities and create derivatives to sell to investors. Then, unfortunately, a combination of the Wall Street greed and the government's desire to increase home ownership, the known American dream, in America made subprime mortgages become widely available to the masses. Investment bankers wanted to get a part of this action, and then they began to include subprime mortgages to the derivatives, and they were selling them to outside investors. This increase in home ownership caused an artificial increase in home prices until subprime mortgages began to default. Because these defaulting subprime mortgages were included in some derivatives, they became worthless investments. Investors began small, lost a fortune. Home prices began to fall and foreclosures increased. And then economies around the world began to collapse as credit froze and the banks ultimately needed to be bailed out by the taxpayers.